Well, it's looking like generally a good day to be in the local markets today, but let's get more perspective on exactly what is going on. And joining me for that conversation is Kyle Burgess, who's a portfolio manager at Nedbank Private Wealth. Kyle, thanks so much for your time. Formally, Happy New Year.
Thank you, and you too.
And all the best for the new year.
Let's hope it's better than 2017 anyway.
Like we said over the phone, we think it's going to be.
Yeah.
But Kyle, let's just start off with the politics, pick up from what Karabo has said there. Rumours that Jacob Zuma might go yay for the markets, but his replacement candidate might not be as well received, being the ex-wife and former AU chair, Nkosazana Dlamini Zuma. I mean, what reaction could we possibly see if this is the case?
So it's quite an interesting situation that, the markets find themselves in now. I think, everyone's waiting for the December conference to be over. It was over, had a favourable victor in terms of Cyril Ramaphosa taking over as ANC president. But now you almost find yourself in a situation where you need to negotiate with President Jacob Zuma, which is not an easy place to be. But Cyril Ramaphosa is sort of leading that, and it's going to be a very difficult one, but rumours, like you say, it is just speculation at this point. So we'll have to just see how it plays out. Hopefully, and it would make general succession would obviously be a lot easier if it was Cyril Ramaphosa leading it, but Jacob Zuma is a shrewd political operator, and I don't think a negotiation with him would be very easy.
Talking about speculation, I mean, we've seen what that has done to a couple of counters on the JSE this week in the wake that Viceroy is going to release a report really soon. How are you interpreting the moves that we've seen connected with the likes of your Aspens and your Resilience and the Fortress, which are actually under pressure again today on those rumours?
So, I think if you have a look at it, so many people, so many investors were holders of Steinhoff and have been affected by Steinhoff and still are affected by Steinhoff, that no one really wants to have another Steinhoff in their portfolio. So there's really a lot of concern around, which is the next SA company that Viceroy has identified as, there being major issues with it. So, the speculation was around that Aspen, that was the target. The stock had sold off heavily, went right down to 235 Rand, I think. But it did recover yesterday very nicely, up 10%, and the market sort of moving its attention really towards the property sector and the resilient group of companies. But, what I think is really important is that this is it's rumor and speculation at this point, and I think that there's been a lot of overreaction to it, but at the same time, there's a lot of fear in the market at the moment that no one does want to have another shocker in their portfolios, which is understandable, but there's no real basis around it just yet. So I think and that's also to say that Viceroy aren't 100% correct all the time. So they called it right with Steinhoff, which is great. I mean, it's not great, what happened, but the fact of the matter is that, they're a research house and they publish research. So I think everyone's waiting with bated breath, but at the moment, that's all that's out there.
I mean, what do you make of them coming out today and essentially saying that, our regulation and our regulators are essentially, our systems are not strong enough, and this is why we're seeing moves like this that are taking place that are costing a lot of people and even the government money?
So I think our system's quite well regulated, to be quite honest with you. So that's interesting that they have said that. We've got deep liquidity in our markets, and especially if you look at the property counters, there is really decent liquidity. And if you look at the likes of Nepi Rockcastle, Resilient, these, it's easily tradable stocks. And from a regulatory perspective, the JSE has generally always been well received. So that is quite surprising. But in terms of the auditing around those businesses, that'll be quite interesting to see how that comes out. And speaking of which, I think everyone's waiting for the end of January when we'll receive the PwC audit report on Steinhoff, because that really will, and I think what's going to come to light is auditors' role in this, because at the end of the day, markets rely on audited financial results, and if that information is incorrect or misleading or not in sort of entirety, that's a bit of an issue in itself.
I mean, Kyle, of course, the end of the month is when Steinhoff will face the music in Parliament. That is going ahead. Maybe we'll see Marcus Jooste make an appearance because no one knows where he is right now. But Steinhoff under pressure again today. Yesterday they released, I call it a midnight statement because the JSE was closed and everybody else had gone, saying that they were redeeming some bonds early. I mean, this is a little bit somewhat of a good thing, right? They're paying off debt. So why are we seeing the share price under pressure?
Yeah, so you could, I thought when I read it, I did think it was, marginally good, because ideally what you would be seeing is them cleaning up their SA business. So selling some SA holdings, which could be the likes of PSG, paying off that debt, and this is generally fairly positive for something like a SAR, which is held in that business. So the SA part of it looks fairly good. So again, we'll just have to wait for more news on that, but sort of from the outset, you'd think that it is, a fairly good statement, but it was released quite late last night.
It was. Kyle, just a quick one. There was also a review that the reason why we saw the property counters get smacked so much was because of the dividend tax now being increased. I mean, a number of them released reports yesterday on SENS about the dividends that they would be paying. Is there a connection with the dividend tax, in your view, and the slumps we saw in the share prices?
So I don't think so, to be honest with you. I think that, this was announced some time ago. It's been in the market for many months, and investors would be factoring this in at the moment. And, if you look at it, really a dividend is only a portion of the REIT's, of the actual investment case. And it's, it's been increased from 15% to 20%, so that's not ideal. Market would have reacted to that at the time, but I don't think that's specifically the reason at the moment. I think really it's more around the Viceroy and the issues around that, because all of these property counters that have been sold off are very complex businesses that operate in very different regions, and they're all interconnected in terms of they all own part of each other. So I think that's really what's driving it. Whether the dividend issue would have been, Resilient coming out specifically and posting really some nice gains. So you would have thought that was a positive, not a negative, and that the 5% increase in dividend withholding tax, really would have been a marginal issue.
Well, Kyle, we'll leave it there. Thanks so much for your time. That was Kyle Burgess, who's a portfolio manager at Nedbank Private Wealth. On to another